Ira, gold at the 1273 mark, you know, headed towards that $1,300 on this maybe new war of words. Why is the market taking this particular dialogue more seriously than previous threats?
Because we have a president that did something that hasn't happened since President Truman. He came out and used history. He had a script, if you watched his eyes, and he made a very clear threat against Mr. Jong-un. And that threat is very clear. The U.S. will take only so much. Now, a threat of words is very different than a threat of real war. And the war option is probably one that it would take them attacking us before we did anything. However, it's enough to set the market up and going. And I think the president did it in part to get the world to really rally around what is going on and to stop North Korea. And that pressure will come not on the U.S., it'll probably come more on China from everyone that they do business with, which is most of the world at this point. So that's where I think the pressure is really about. But the market takes it serious, and away you go in the gold. In fact, all the safe havens, Swiss franc, the Japanese yen, gold, bonds, notes, a correction. It's August. Why not? Makes sense to me.
Does it impact demand for oil and the price of oil, particularly as we await inventories as well, Ira?
Well, here's what I think on oil. Oil, we're waiting to see, in part, what OPEC said. Now, you just reported a few minutes ago that OPEC says they have spoken to the UAE, Iraq, and they're trying to get them to come in line. The simple fact is they haven't been in line. You've had Iraq complying at about 29% of the cut that they said they would do, the UAE about 60%. That is not compliance. The real problem is I don't see supplies being materially impacted just by OPEC. The higher prices go, other countries come online. The Saudis can cut their production to Asia. The problem is other people will make it up.